So at a record low today is the currency, and that is of course as an impact of the geopolitical developments that are taking place. And although IT stocks it's a positive for IT, but let's go across to Rima to get us more on this fall in the currency and the impact on IT. Rima.
Thanks so much for that. I think the big question is that if there is an INR depreciation, then how much will it benefit the margins of Indian IT companies? For that, let's take a look at the December quarter. Now, in the December quarter, the rupee ended at 89.2, and there was an average depreciation of 1.7%. At that time, TCS had a margin benefit of 20 basis points. Infosys had a margin benefit of about 40 basis points. So the general rule is the 1% rupee depreciation can benefit margins by 10, 20, maybe even 25 basis points, depending on the hedges of the company. Now, what we've seen today is an average level of 89.2 in Q3 versus an end level of 92 today. But we'll have to wait by to see what the average for Q4 remains. But the second factor which is helping is that one, of course, is the INR depreciation, but two, the fact that Indian IT was the worst performing sectoral index since the start of the year with a fall of about 20%. And now the index is about 1.5% away from the recent low, which was the 52-week low. But I just want to highlight a few stocks which in the fall have been more resilient. So while the index is off about 1.5% from the 52-week lows, a persistent Tech Mahindra, Infosys have all recovered 10-12% from their lows. LTTS has recovered nearly about 7%. So when there was a recovery in the IT stocks or resilience in the IT stocks over the last couple of days, these are the stocks where you saw maximum up move. Back to you.
All right, Rima, thanks very much for joining in with that. We'll now shift